Welcome back to our video series on personal finance and investment. In our last video, we discussed how to use credit cards and how credit card companies profit off of inexperienced cardholders. In this video, we will talk about insurance and how some different types of insurance work. First of all, what is insurance? Fundamentally, insurance is just a way to lower the risk of financial loss. There are usually two parties involved. You have a policyholder who buys the insurance, and an insurer, which is usually an insurance company, who provides the insurance. The policyholder pays a premium to the insurance company on a regular basis. If something bad happens to the policyholder that corresponds to what is outlined in their insurance contract, the insurance company will pay the policyholder a sum of money to compensate them for their damages. Insurance terminology such as policyholder, premium, deductibles, and insurance limit can seem confusing. A policyholder is the individual or individuals purchasing the insurance. They pay premiums, which are regular payments to an insurer, who in turn will give them insurance. Deductibles are the minimum damages that must occur in order for the insurance policy to kick into effect. Most insurance policies have some sort of deductible to ensure that the policyholder doesn't try to activate their insurance policy for trivial costs. Finally, an insurance limit is the maximum expense that the insurer will cover. Insurance policy premiums differ based on the varying coverages. While one insurance policy may have a cheap premium, it might not provide the coverage that you need. You want to assess the risks of buying cheap insurance and whether it's a risk you're willing to take. The saying, "You get what you pay for," is particularly applicable in insurance. One type of insurance is life insurance. If an individual purchases life insurance and they die, the insurance company will compensate the family of the deceased policyholder for their death. Normally, people purchase life insurance if their source of income supports their family. This way, the insurance company can compensate for a deceased family member's lost income. Life insurance can mitigate the financial burdens caused by an unexpected death in the family. That being said, not everyone can get life insurance. Life insurance companies will sometimes deem people with chronic illnesses as uninsurable. Certain individuals, oftentimes those with deadly terminal diseases such as cancer, AIDS, or Alzheimer's, may be declared uninsurable by the insurance company because there is too high of a risk for the insurance company and they cannot expect to make a profit. However, if you already have life insurance and then get diagnosed with one of these diseases, insurance companies are legally prohibited to take away your insurance. In addition to life insurance, car insurance, homeowners insurance, and health insurance are several other common insurances that people buy. You buy car insurance to lower the financial burdens caused by a potential car accident. Every car on the road needs to be insured by law. Car insurance premiums will be higher for young drivers because statistically there is a greater probability that these drivers will get in a car accident. Insurance companies factor in this risk when determining premiums. Oftentimes, car insurance is the first type of insurance young people encounter. If you are a student and looking to purchase car insurance, you may have the urge to purchase the cheapest plan available. However, this plan may not be the best for you. Cheap car insurance policies might not cover the cost of certain accidents. It may be financially prudent to go with a more expensive policy just to be safe. You've most likely heard people talking about health insurance before. Health insurance is unique because oftentimes people buy health insurance through their employer. Most people can get cheaper insurance through purchasing their health insurance this way. If you have a medical accident, but your medical costs total less than the deductible amount, the insurance company will not pay anything. If your costs are greater than the deductible but less than the insurance limit, your insurance company will pay some portion of the cost for you. All deductible and insurance limits are predetermined in insurance contracts. You buy health insurance to help cover medical bills in case of an emergency. Because medical costs are so astronomically high in the United States, having health insurance can help relieve some financial burdens. According to a statistical study done on childbirth costs in the US, the average total cost of a childbirth with no complications is about $10,000 to $20,000, and that price shoots up if a cesarean section or C-section is needed. Without insurance, most people cannot expect to pay these bills. However, with health insurance, your insurance company will pay for most of these costs. It's incredibly important to have health insurance, even though hospitals are legally obligated to treat everyone regardless of their financial situation. If someone who doesn't have health insurance can't afford their treatment, their costs will be distributed to taxpayers and other patients at the hospital. Over time, these costs accumulate and can drive up medical expenses for other people. That is why health insurance is incredibly important for everyone to have. We mentioned earlier that insurance can be bought for virtually anything involving financial risk. Some celebrities even go so far to insure certain body parts that are financially important to them. Singer Bruce Springsteen reportedly insured his vocal cords for $6 million, and actress Julia Roberts reportedly insured her teeth for $30 million. These celebrities insure their bodies because if those body parts were damaged, they wouldn't be able to make money. If you want to learn more about some crazy celebrity insurance policies, there is a link in the video description to 20 crazy insurance policies that celebrities have. In a nutshell, insurance is when a policyholder pays a premium to an insurer, who in turn guarantees the policyholder financial compensation if certain damages occur. Insurance is a very simple concept that can get complicated when you need it. It can be extremely difficult to assess how much coverage to purchase and whether it will be worth the extra money. Hopefully, this video has helped you gain some basic understanding into the vast and bizarre world of insurance. As always, thanks for watching, and I'll see you next time.